Good morning, everybody. For those of you who have just joined us, we completed a sound check there 5 minutes ago, and so we're good to go now at 11 o'clock. So my name is Karen Bennett. I'm the Marketing Manager here at BrightPay. These auto enrolment webinars are specifically designed for accountants, bookkeepers and bureaus who have payroll clients. What we aim to do with these webinars is to inform you about the auto enrolment process. We will also explore the opportunity that is presenting itself to make a profit by offering automatic enrolment as a chargeable service to your clients. Now we're lucky enough to welcome the lovely John Hale from Nest. John has worked in corporate pensions for over 40 years, dealing with all aspects of running a pension scheme. He has worked at Nest for 3 years now, and his current role is to assist a range of organisations who provide services to employers where they want to use Nest. John works closely with a number of payroll software providers to help them use Nest in the most effective way. John will present Nest, helping make auto enrolment work for you. Throughout the webinar, you're quite welcome to type in any questions you may have. Today's webinar is being recorded, and a copy of the recording will be emailed to you. So let's begin with my section, Employer Duties under Auto Enrolment. Here is my agenda for my slot today. Just to note, when talking, I will often refer to auto enrolment or automatic enrolment simply as AE. So we will start off today with a brief overview of what is auto enrolment. A more detailed step-by-step guide is available on the Pensions Regulator's website for both employers and payroll bureaus. So auto enrolment is about the legal requirement of employers to enrol their employees into a pension scheme. The date that an employer must enrol its employees is called the staging date. The Pensions Regulator writes to employers at least 12 months before they are due to stage. So armed with your PAYE number, this date can also be found on the Pensions Regulator's website. So what auto enrolment actually means for an employer is that from their staging date, or from their deferred date if they're using postponement, all eligible job holders must be automatically enrolled into a pension scheme, and the employer must make contributions to their pension. All employees must be assessed to determine whether they are eligible job holders, non-eligible job holders, or entitled workers. So eligible job holders are those who are aged 22 and state pension age, earn above the earnings threshold, currently £10,000, and work in the UK. Eligible job holders have the option to opt out after being enrolled. All other employees are either non-eligible job holders or entitled workers, and they can choose to opt in or join the workplace pension scheme. Basically, auto enrolment is something that is optional for the employee but mandatory for the employer. With auto enrolment comes a number of responsibilities. So a pension scheme must be set up with a qualifying pension provider, and this should be done in advance of your staging date. This should not require a great deal of time to complete. If you have no eligible job holders, then you don't need to set up a pension scheme. However, if any employees choose to opt in or join, then a pension scheme must be put in place. Next, the workforce must be assessed, and all eligible job holders must automatically be enrolled into a workplace pension scheme unless postponement is being used. All employees must receive communications within 6 weeks of the staging date, not just those who have been enrolled. You must notify eligible job holders, non-eligible job holders and entitled workers of auto enrolment and how it will affect them. Now apparently some employers do believe that if they choose to postpone all employees for 3 months at their staging date, then nothing needs to be done in that 3-month period. This is not the case, as all employees must receive communication within 6 weeks of the staging date, stating that they have been postponed and explain when they will be reassessed. If this communication is not issued, then postponement effectively never happened, and enrolment must be completed retrospectively back to the staging date, which in itself would be a nightmare. There are also a number of ongoing employer duties, such as handling opt-outs and opt-ins, making deductions and contributions, monitoring employees each pay period, and sending contribution files to the pension provider. Employers, or you on their behalf, must complete a declaration of compliance within 5 months of the staging date to notify the pensions regulator that they have complied with AE. So now we'll have a look at how auto enrolment affects small and micro employers. So auto enrolment has been rolled out in stages across all employers and started with the larger employers in October 2012. By October 2018, all employers will be required to offer workplace pension schemes to eligible job holders. New employers or new PAYE scheme users will begin to reach their staging date depending on when the PAYE income was first payable. These employers will have a staging date between the 1st of May 2017 and the 1st of February 2018. By the end of October this year, almost 300,000 employers have completed their declaration of compliance, enrolling over 6.8 million eligible job holders into a workplace pension scheme. The pensions regulator estimates that over the next 3 years, over 1 million small and micro employers will need to act as a result of auto enrolment. Now you'll see from this slide that the so-called tsunami keeps growing and growing each quarter, with the largest number of employers reaching their staging date early next year. You can also see from the slide that auto enrolment will affect 170,000 employers within the next 3 months. Now, a lot of companies before now, staging before now, probably would have had their own HR people or in-house accountant to help them through the enrolment process. The vast majority of those staging from now will have no in-house expertise, and these employers may not have the knowledge or expertise to make informed decisions when it comes to their AE obligation. So with the vast quantity of information available, employers are fast becoming confused and overwhelmed. These clients will require help understanding the implications for them, their employees and their business. So you really do have a gift-wrapped opportunity, and this is business that you don't have to go chasing. So auto enrolment as a service. It is estimated that 90% of an accountant's or bookkeeper's client base is made up of employers with less than 50 employees, and it is from now onwards that these employers will be affected by auto enrolment. Payroll bureaus need to decide if they are ready to take on AE business. With many shying away from offering this as an extra service, bureaus will need to determine what kind of information and support they will offer to help their clients comply with these new AE duties. Advisors will even find that a large portion of employers will contact them very close to or even after their staging date. If a client does contact you after their staging date and has done nothing, and if their staging date has passed by less than 6 weeks, get them to issue postponement letters to all employees immediately. Otherwise, they will need to backdate AE back to the staging date. So be sure to convey the client benefits of outsourcing AE tasks to you. If you take the opportunity to inform your clients about the added value, they are more likely to remember and understand your service offering. So time. There will be significant time savings for your payroll clients. By outsourcing AE to a payroll professional, your client can avoid investing huge amount of time researching how to comply with AE. The implementation of AE could also be very time-consuming if your client doesn't have the correct technology or software in place to automate a lot of the administrative tasks. Cost. Without your help, your payroll clients may choose payroll software that doesn't have AE functionality. Even if it does, some payroll providers are charging an additional charge for the AE functionality and a further charge to support your clients through the process. With a bureau, your client can avoid costly mistakes and save time that otherwise would have been taken out of their normal working week. So focus on core areas. Especially when we have a look at the small and micro employers, their time is extremely precious. Time away from their business is money. Outsourcing AE to a payroll professional frees up their energies and enables them to focus on the core areas of running their business. Expertise. Implementing AE may require skills that client staff do not possess. Outsourcing will provide a level of continuity to the company while reducing the risk of possible non-compliance. By offering a complete end-to-end solution, bureaus can generate income and enhance client relationships. If bureaus offer other services such as bookkeeping, tax returns, audits, management accounts, etc., they potentially have a new platform to reach and upsell to this new audience. You will find that employers will be happier to consolidate all of their outsourced services to one person or advisor. So now we'll have a look at existing payroll systems. So while there is no obligation to have software in place for automatic enrolment, the Pensions Regulator encourages employers to use an integrated payroll and AE solution that can automate employer duties and simplify the AE process. It is important that payroll and AE software can handle all of the necessary employer duties, and you should test it well ahead of your staging date to make sure it works. Now, some payroll providers have auto enrolment functionality, but it can be cumbersome and time-consuming, while other providers offer a streamlined solution that will automate the AE duties for you. The speed of automated AE software offers both significant cost savings and time-saving benefits to bureaus. This will be especially relevant when these employers approach their bureaus close to, at, or even after their staging date. AE does not need to be a major headache for bureaus, provided you take some time to make sure that the right tools are in place. AE should become a seamless part of the payroll process. By making sure that your payroll software does the following functions, it will allow you to start making a profit from AE. Ask your payroll provider the following questions. Does your payroll software automatically assess your workforce, allow the use of postponement, automate employee communications, calculate pension contributions, handle opt-in and joining, handle opt-outs and refunds, notify you when actions need to be taken, keep records and provide reports, integrate with some or all of the major pension scheme provider systems, and finally provide free support. If you are selecting new software, you should ensure that it is compatible with your existing systems. So now we are going to have a look at how BrightPay handles auto enrolment. BrightPay is an integrated payroll and auto enrolment solution that will automate and simplify the AE process. We really do try to make it as easy as possible for you to help your clients achieve compliance while saving you both time and money. So I'll now hand you over to Rachel, who will show you how easy auto enrolment can be with BrightPay. We'll also take a quick look at BrightPay Cloud, which is our latest add-on product. So thank you, Rachel.
Thank you, Karen. So we'll start off first with setting up a pension scheme in BrightPay. So details of your pension scheme can be entered in BrightPay in advance of your staging date. Within the pensions utility, simply click Add New Scheme and choose the relevant pension scheme option from the listing. So currently we offer dedicated support for 17 pension providers, as you can see on screen. And if you're using a pension scheme that's not on the list, we have an other auto enrolment scheme option. So using Nest as our example, you must now enter your employer reference in the field provided and enter your submission details for using Nest Web Services. On the following tab, you have to enter your group details, and this must match exactly as you have them set up with Nest. Here you can also set your contribution type and earnings basis and add further groups if required. For example, if you have employees on different pay frequencies or sets of employees with different contribution rates. So when ready, click Save to complete the setup. Once the staging date has been reached in the payroll, you will see on-screen flags and alerts appear, which will notify you that you now have auto-enrolment duties to perform. So at your staging date, BrightPay will automatically assess your employees for you and determine whether they are eligible job holders, non-eligible job holders and entitled workers. So these alerts will bring you through to the relevant actions available for the selected employee's work category. So here we see that this employee is being assessed as an eligible job holder, and if we click on View Options, we'll see that we can enrol them in a qualifying scheme, postpone the employee for up to 3 months, or mark as exempt if applicable. So we're going to enrol the employee. We must now choose the scheme that we wish to enrol them into and select the tax relief. We can also click Continue if we just want to enrol this one individual. Alternatively, to batch process multiple employees at the same time, we can click Enroll multiple employees with these settings. Select the employees who you wish to enrol and click Enroll Selected Employees. Once an employee is enrolled, BrightPay will then automatically prepare the employee's enrolment letter, and this can be printed, exported to PDF, or emailed to the employee. Enrolment letters can also be batch processed for multiple employees by clicking Create or Send Letter for multiple employees. When ready, simply mark this as done as record that they have received the letter. Our next employee then is a non-eligible employer, and if we click on View Options, BrightPay will automatically prepare their right to opt-in letter. We can opt them in if they choose to do so, postpone, or mark as exempt. So here we'll click on the letter and again mark it as done. Once employees have been enrolled, have joined, or opted in, returning to the payroll, you will now see their pension deductions being applied to their payslip. If we finalise the payslips and go into Print Preview, you will also see the relevant AE deductions and contributions showing up on the payslips of enrolled employees. Pension files can also be prepared for submission to pension providers. To prepare the enrolment file for Nest, simply go to the Pensions tab, click Nest on the menu bar, and click Enrolment Summary. At the top of the screen, click Send Enrolment Submission. Send Enrolment Submission, and select the employees to be included in the enrolment file. And step 2, enter your payment source. These again must match exactly how you set up the information with Nest. On the following screen, we simply click Send Now, and you will receive confirmation back that Nest have received your enrolment file. If you are using a pension scheme that is not supported by one of our APIs, at this stage you will need to save the file to a location on your PC and log on to the pension provider's web portal to upload the file. After each subsequent pay period after staging, you must also send a contribution file to the pension provider. Staying within our Nest example, select Contribution Summary on the menu bar and choose the period you wish to submit the contributions file for and click Send Submission. Enter your payment due date, which you will have set up at Nest, and in step 2, select all the employees who you wish to be included in the contribution file. At step 3, for applicable employees, select the reason for any partial or non-payment of contributions. And at step 4, simply click Send Now. If any opt-out notices are received for an employee, simply access the employee's Auto Enrolment utility and select the opt-out option. Enter their opt-out date and the opt-out reference if applicable and click Continue, and the employee is now opted out. So if we go back to the payroll, if the employee has already made contributions, you will then see a refund of all pension contributions made to date processed for them in the following period. So as well as BrightPay, we also have just released BrightPay Cloud. BrightPay Cloud is an online self-service portal enabling automated backups and online accessibility. This is an optional add-on to the current software. Although the payroll information is stored online, you will still be required to have the desktop software, and the payroll can only be processed on the desktop. You will find a new cloud icon icon at the top of your screen, and once you've set up BrightPay Cloud and connected the employer to the cloud, this cloud will now turn green. So you can see here we are connected. BrightPay Cloud automatically and securely backs up your payroll data every 15 minutes, and again when you close the employer file. This ensures that you will never lose your payroll data again. BrightPay Cloud keeps a chronological history of all backups that can be restored at any time. If we open the self-service portal, BrightPay will open the online employer dashboard. For bureaus who offer payroll services to a number of clients, you can add your client as a user so that they can log on into the employer dashboard. These employer clients will then be able to log on to the employer dashboard at any time using their PC, Mac, tablet or smartphone. This employer dashboard can be branded with the bureau's details and enables the employer to view payroll reports, P30s, employee calendars and all employee information. Employers and bureaus can view all employees in the employer data file with the ability to click on an individual employee to view a full history of all payslips. Reporting is also integrated with BrightPay Cloud. All reports set up in BrightPay can be viewed from within the employer self-service portal, allowing employers to access reports on the go anytime. If we click into a report, you will see that the report can be exported or modified. This is useful for bureaus whereby the employer can view reports without the need for the bureau to send them to the employer each pay period. We click into the calendar then. The self-service portal includes an employee calendar, allowing the employer to view all past and scheduled leave, such as annual leave, sick leave and statutory leave for all employees. P30 details are also included with a record of HMRC payments and amounts due to HMRC. BrightPay Cloud also allows users to upload BrightPay 15-16 data to immediately have a full year of historical data to power the self-service features. Along with the employer functionality, BrightPay Cloud provides bureaus with a multi-company platform. Multiple users can also be added to access these companies. Here, bureaus can grant access to other co-workers to view multiple companies. This is also where bureaus can add their clients to view company-specific payroll data. Now to show you what the self-service portal looks like for employees. This portal looks similar to the employer portal, however, employees are limited as to the information that can be accessed. Employees will get notifications when payslips are available and can click into the documents to view a full history of all their payslips. P60s, P45s, P11Ds and Auto Enrolment communications can also be viewed in this Documents tab. These payslips can be viewed, exported by employees without the need for the employer or bureau to print or email the payslips each pay period. Employers can use the self-service portal to view and update personal information such as phone number or postal address if required. Finally, the employee has a calendar in their employee portal, and the calendar tab will allow employees to view their calendar, including past and scheduled leave. Employers can also request annual leave through the portal. By choosing the relevant dates and clicking Submit, the employer will automatically get a notification that the employee has requested leave. Going back to the employer dashboard, you will now see that the employee's leave request has come through on the notifications panel with the option to approve or reject the leave. So if we approve the leave and if we click back into the calendar, we will see that the leave request has been added to the calendar, both on the employee and employer portal. The leave will also be automatically synced back to the employer data file on your PC. You can find more information and videos about BrightPay Cloud on our website. This was just a very brief overview of BrightPay Cloud. However, we are running free online demos of BrightPay Cloud every week, where we look at everything in much more detail detail, including setting up a BrightPay Cloud account, connecting your employer file, adding other users, and annual leave requests. We will include a link to register for a BrightPay Cloud demo in the follow-up email later today. So just to let you know, our Bureau license costs £199 plus VAT per tax year, and this includes unlimited employees, free phone and email support, and full auto enrolment functionality. Just before I pass you over to John, I would just like to say if you do have any questions in relation to mine and Karen's part of today's webinar, make sure to type them into the questions box at the right of your screen so that we can get through as many questions as possible at the end. So I'm now going to pass you over to John Hale from Nest, who will discuss Nest helping make auto enrolment work for you.
Thank you, Rachel. So I'm John Hale from Nest, and first of all I'd like to thank BrightPay for inviting me here today to talk to you a little bit about how Nest can work for you as payroll bureaus and accountancy firms and so forth. I need to show you my legal slide. We won't dwell too much on that, but that's just the limit of what I can and can't do. And first of all, tell you a little bit about Nest, the organisation I work for. Nest was set up by the government in order for auto-enrolment to work in the UK. So the Nest pension scheme is there to do more than just meet the minimum regulations. We go way beyond that. It's something that's open to all employers in the UK who need to have a good quality pension scheme. We make sure that the scheme is well run and well looked after. We have independent trustees to make sure that the scheme is managed for the benefit of the members. There's also an employer and member panel, and they're there to advise and support the trustees whenever we want to make changes or when we're thinking about amending what we do. The members of the employers and members panel are all employers and indeed members of the Nest pension scheme, or people who use the Nest pension scheme. So they have first-hand experience of how it all works. When Nest was first designed, one of the things we had to think about was the vast number of people who are going to need a pension scheme. You've already seen from the figures that Karen showed you earlier that although nearly 300,000 employers have come to the point where they need a pension scheme, there's still lots more, about another million or so people, who have yet to get to the point where they need to set a pension scheme up. So in order to cope with that, whilst there are lots of people out there who can provide pension schemes, Nest is there and we are required. We can't say no. If somebody needs an auto-enrolment pension scheme, we have to say yes. We had to find a way in order to cope with vast volumes coming through and for the system to be there and to be reliable. So we designed a true e-pension scheme. The whole thing can be run online by both the employer, by the member when they're a member of the scheme, and that includes all the functionality. Everything you need to do on Nest can be done online. You don't actually need to talk to anybody at Nest to set up a pension scheme. You can go online, you can do it straight away now in a few minutes. To make sure that the pension scheme was good value, we are a not-for-profit organisation. So there's nobody creaming off the profits from Nest's activities that are going to shareholders or anybody else. And perhaps just for reassurance for yourselves is that Nest's whole focus is around pension schemes. So if you put clients onto the Nest that set up employer accounts for your clients on Nest, you don't need to worry about us going to them selling other things, other pension schemes or ISAs or any other product. All Nest does is auto-enrolment pension schemes. That's all we do. There's nothing else. We don't try and sell other things to your clients. As it says in the slide, pensions, it's all we do. That's all we know about. So let's look a bit more detail about Nest. I guess one of the key things that may be helpful for you to know is that we are free to use. So there's no charge for an employer to use Nest. We don't make a one-off charge at the start or an annual charge. Indeed, importantly for you, if you're acting on behalf of the employer, there's a facility called Nest Connect, which I'll talk about a little bit later on. There is no charge for you to use that for your employer. It's all free to use. Of course, there are costs. We have to pay for computer systems and for our staff, but these are low costs. The government set a cap on the charges that pension scheme providers can make for auto enrolment default funds, and Nest is well within that cap. For those who want to know, there's lots of details about our charges on the website, but the headlines are: we take 1.8% from each contribution that's paid by way of a charge, and the annual management charge is 0.3% per annum. So if you're going to express that in a slightly simpler way than I've just done, it broadly equates to a charge of about 0.5% per annum on the funds under management, which is, as I said earlier, well below the cap set by the government. Because we want to make sure that Nest is a good quality pension scheme, we want to make sure it's good quality for everybody. So whether you're a huge employer employing thousands of people, or whether you're the hairdresser on the little corner shop or a garage or whatever, employing just a handful of people, or even one person, you get the same terms. Everybody is dealt with in the same way. There is no differential charging, and everybody gets the same service in terms of when you go onto the website, you all see the same things. It doesn't matter how large or how small you are. And if we think about the many employers that probably your client employers you're dealing with, most of these will be quite small employers because of the ones yet to reach their staging date. And they will know if they come to Nest that actually the pension scheme they've got, the benefits they get from the pension scheme, are the sort of best pension scheme and benefits that large employer organisations enjoy, so they will get the benefit of that. Karen talked earlier on about opting out, and I think Rachel showed you a demonstration of how you could do an opt-out. Nest, the way we manage opt-outs for you is that basically most of the opt-out administration is dealt direct with Nest. So once somebody's been enrolled onto Nest, one of the workers of your employer clients, we send a booklet to the worker, and we call it a Welcome to Nest booklet. That goes out the day after we've been told about the enrolment. When they get the booklet, that tells them how they can opt out. If they want to opt out, there are three ways of doing it. They can do it by either phoning us or by going onto our website and going through a process to tell us they're certain they want to opt out. If either of those two routes are chosen, we then tell the employer, and if you're acting on behalf of the employer, we also tell you that the person has opted out. Nothing more to do from our point of view. You just need to make sure you obviously cancel their pension scheme membership within BrightPay and refund any money that needs to be refunded to them. The third way of opting out, an employee can phone us and they can ask for a paper opt-out form. That's fairly rare. Not many people do that because obviously if they do, we will point out to them they could do it by this phone call or they can do it online. If they ask for a paper form, that paper form is sent to them, and the form says, please return this to your employer. So in the demonstration that Rachel showed you earlier, where you had to put that number in, the only time you'd need that number for an opt-out is if you've got a paper form from Nest that one of the employer's employees has given you, or the employer. And on the top right-hand corner of that paper form is this unique number, so we can identify it to the employee. And you just put those details in on the BrightPay screen, and that will get the worker opted out. I talked briefly earlier on about something called Nest Connect. So the way Nest is set up is that other organisations can help employers run the pension scheme. So to do that, you need to set up a Nest Connect account. That will take a few moments to do. You register yourself on Nest as an accountancy firm or a bureau, payroll bureau, and that will then allow you to act on behalf of your employer accounts insofar as their Nest account is concerned. So you can, if you want, set up a new Nest account for each of your employers if you wish. You can run the account on their behalf by adding workers, enrolling workers and paying contributions over to us. It's whatever you agree with your clients, you can do. So the system lets you do the whole lot, or you can choose to do less. You don't need to tell us what you're going to do. It's something you agree with your employer clients, and the system just caters for that, so let you do as little or as much as you actually need to do. Your Nest Connect account, you will add to the Nest Connect account the people who work for you, so your employees, if you've got employees working for you, who are going to need to access it to deal with these employers. Really easy to do, and you can assign employers to each individual working for you. So if you want everybody to work on all clients, you can do that, or if you just want different employers assigned to different people, you can do that as well. All really easy. There's lots of instructions on the website, so if you go to the Nest website, details will follow shortly, and just search Nest Connect, you'll get lots of information of how to do it. One of the features of an auto enrolment pension scheme is that the employee has to make no decision in order to join the scheme. It's auto enrolment. Therefore they just have to be put into the pension scheme. Typically in a pension scheme you're required to make an investment choice, tell the pension scheme how you want your money invested. Under an auto-enrolment pension scheme you don't need to do that, because we have to have what's known as a default investment fund or default retirement fund. So we automatically put the worker into a pension fund, an investment fund. They can choose to change it later on if they want to, many times as they like, but they can't at the start. At the start they're just put into this fund. So Nest has paid a great deal of attention to getting the right sort of auto-enrolment pension funds, and in fact we've done so well at it, we've won lots of awards, and again lots of details on our website. We have a different fund for each retirement year, so we have on the slide you can see 2035, so whichever year the person's retiring in, they'll get a fund with that year date in, and the investments are tailored to their retirement date. Change their retirement date when they want to, and the system will sort itself out. That's up to the individual to do direct with Nest. So I want to quickly now just talk about making auto-enrolment work. What I want to talk about here for you is just some of the lessons we've learned over the last 4 or 5 years that auto-enrolment's been running. What are the things that go wrong? What are the things that cause problems? And most of them are really, well, they're all really easy to avoid with a bit of advanced preparation. So I've put a list on screen of the top 7 that I've come across in my time at Nest, and my colleagues have helped me produce this. Let's just quickly go through them. So the first is know your staging date. Well, Karen talked about that earlier on, that the employer gets a letter from the pension regulator. You'd be surprised how many can lose that letter, don't know they've received it, but it is key that if you're acting on behalf of your employer clients, you know what their staging date is, because from the staging date that's when their legal duties start. You can postpone up to 3 months, but you don't postpone the staging date, you just postpone when you have to auto-enroll. In that 3 months period, people could still ask to join the pension scheme, and if they qualify, if they opt in, you are required to put them in. So knowing that staging date and making sure that the employer has met their legal duties is really, really important. You need to choose a pension provider. Clearly, if you need a pension scheme, you need a pension provider. Now, I work for Nest, so obviously I'll tell you to choose Nest, but there are lots of pension providers out there. Very many are very happy to take your business. But you need to decide who it's going to be. Now, obviously your employer clients will need to do that. You won't be able to decide for them, but you may be able to tell them about the pension providers you work with, and then they can choose from those. Once you've got your pension provider, you also need to check that your payroll can deal with auto-enrolment. That may seem a really obvious thing to say, but you'll be surprised the number that don't do it properly or fully. And it is worth just checking out that your payroll that you're using can actually do everything that you need it to do for auto-enrolment. Will they do the assessment you need to do every week, every month? Will they send out letters on your behalf? And all sorts of questions like that. Well worth making sure you know that before you get too embroiled into auto-enrolment, because there are quite a few things to think about. And nowadays there are some really good payroll software packages out there that will do lots of that for you and make your life easier. Point 4 is, does your payroll package talk to your pension providers? Again, it may sound obvious, but basically you're going to need to give your pension provider some information about enrolments, new members, and about contributions. Most payroll providers now will produce CSV files that you can upload onto the provider's portal, but is it going to be in the right format, or are you going to have to make some changes to it to make it work? If you're dealing with lots of clients, you need to make changes, that's a lot of work. So well worth, again, finding out exactly who your payroll provider talks to, can deal with, and that the providers that you're prepared for your clients, your support, are able to deal with the files coming from your payroll provider. But even better than that, a relatively new thing is something called web services. And you saw earlier on in Rachel's demonstration that with BrightPay, you get this web service transaction. What that means is from within the software, your payroll software, data is sent automatically to the pension provider without you having to log on to the pension provider's website in order to upload data manually. So much better, so much slicker, and we're now, Nest launched this just over a year ago, and we already have many thousands of employers using this service via a number of payrolls. I'm really pleased to say that BrightPay have embraced this very fully, and you get a super API, they're called APIs, the link between the payroll provider and the pension provider. You get access to the APIs that will run most of the pension scheme for you. So you can do it, most of it, from within your payroll software. But you will need, or the employer will need, just to go on and just confirm at the end that they're happy with what's been uploaded and to make the payment over to Nest if you're using Nest. A number of other providers do that, but again, you'd need to check out with the providers exactly what they do. So you've now got your pension scheme running, and one of the things we do observe is that in the first couple of exchanges between the pension scheme and the pension provider, that sometimes issues arise, and often it's really, really straightforward in that the pension scheme hasn't been set up to match what's coming out of payroll. So Rachel talked earlier on in the demonstration about payment sources and groups and things like that. These are things we have on Nest. When you set Nest up, you give these things a name. You need to make sure the name you put into Nest is exactly the same as the name that you put into BrightPay. If you don't, the computer won't know what to do with it. Near misses are not allowed. It has to be an exact match. So if you call your pension scheme group staff, capital S-T-A-F-F, then you need to make sure that when you set it up on BrightPay, you use exactly that on BrightPay, and it will then work fine. Sadly, you'll then see, so I've used this slide before, and I've not noticed it before, that I can't count. I seem to have got 2.6s. Let's make sure that's changed for next time. I've used this slide lots, and I've not noticed that before. I've not paid attention, obviously. Anyway, so my second 0.6, which is really 0.7, is about issuing the statutory communications in good time. What do I mean by that? A statutory communication, there are basically two that you need to worry about. The first is that if you're postponing, there's a postponement letter to issue when the person should join the pension scheme, so that might be the employer's staging date, or it might be sometime later when there's a new worker. If you're not postponing, you don't need that one, but most people do postpone. And then later on, when you do an assessment, if the person's going to join the pension scheme because they qualify as an eligible job holder, you've got an auto enrolment letter to send to them as well. Again, good news, BrightPay will sort all that out for you, but again, you need to make sure that somebody is going to send them, and a pension provider, Nest, doesn't do it. It's done either by the employer or by payroll, or by yourselves if you're acting on behalf of the employer. But because it's a legal requirement to send these out, and there's a time limit for them to go out, 6 weeks after the due date is the end of the time period, you need to make sure, somebody needs to make sure it's done. And again, we see people slipping up on that. Just basic stuff, really, making sure they put it in the calendar. And my last item, which says 7 but should really be 8, is really to understand that this is something that happens now every pay period. So that you're not just doing this job once for an employer, but every pay period you need to make sure you assess the workers who are not in the pension scheme to see if they qualify, and you need to pay contributions in good time. So there are legal requirements about the timings of paying contributions over to pension providers. Typically, they've got to be paid by the 22nd of the month following the month they're deducted from pay. It might be earlier though, depending what the employer's set up. Whatever the timetable is, it has to be met. This is a process that has to be followed every pay period. So again, this is something you can offer for employers. The fact it is something that needs to be done, if you've got a reliable, resilient service you can offer, that will take a huge weight off their minds and enable you, hopefully, to have an extra profitable source of business from your existing clients and maybe even some new ones. So I've talked a bit about Nest. I've talked a bit about some of the things we've observed about making Auto Enrolment work. And finally, I just want to talk about, well, does it actually work? I keep saying Nest works. Well, does it work? I think the best evidence I can give you is that we already have over 200,000 employers using Nest. There's lots more to come, but clearly if 200,000 employers can use it, they've all set up by themselves, or they've used third parties like yourselves, Payroll Bureaus and accountancy firms to get set up on Nest for them. Clearly there's something that must be working okay. We also have over 3.7 million workers in the Nest pension scheme already, and that both of these numbers go up. Every time I look at them, they've gone up. I did this slide a few days ago. I haven't looked today to see what the numbers are today, but I would guess that both those numbers will have changed. We already have over £1 billion of money invested on behalf of those 3.7 million members. Fairly small contributions at the moment, but as you probably know, contributions are going to increase in April 2018 and then again in April 2019. So at the moment, the overall contribution is 2% of qualifying earnings, and it's going to go to 8% qualifying earnings by 2019. So those funds are going to grow hugely. And then finally, perhaps the one of most interest to everybody on the call today, some of these Nest connectors I talked about. There are over 12,000 accountancy firms and payroll bureaus and IFAs and a whole range of other people who are Nest connectors who use the Nest system on behalf of their clients. Works really well. 12,000 people using it, that number is growing up rapidly, and hopefully if you're not using it, you'll investigate using it by going onto our website. If you are using it, then hopefully it's working well for you. If not, we'd love to hear if you have any issues. Hopefully I can answer any questions you've got later. So finally, I'm now going to put some details on the screen, which will give you our website address and various other connections. So lots of information on there for you, which will hopefully fill in some information. I'm now going to hand back to Rachel.
Thanks, John. That was great. Before we get to the questions and answers, I just want to go through a few quick things here. Our next webinar is on Tuesday, the 6th of December, again at 11 a.m., where we will discuss Auto Enrolment 7 Steps to Profit with BrightPay. And we will also have John returning again for this webinar to talk about Nest. So we are going to take a 2-minute break quickly just to have a look through the questions, and you can have a chance to send through the questions, and we'll be back shortly. Thank you.
Okay, welcome back everybody. So we'll now work through as many questions as we can. So we also have Vicky that is with us today, and Vicky is the BrightPay support manager. So she'll be taking any questions that we have in relation to BrightPay and the functionality. So this one here I think is for Vicky, and I think it's in relation to the BrightPay cloud. So if an employer leaves you, do they still have access to this history in the cloud, so your payroll history effectively?
Okay, excuse me, hi everybody. Yeah, so if an employer does leave you, what you can do is simply disconnect them so that they no longer have access out their side.
Okay. Okay, so I think there's another one for BrightPay. So what about when employers ask us to run the payroll, but the pay slips might not go to the employee for a few days? Will they show up in the cloud?
Yes, so on the employer portal in the cloud, obviously everything will be uploaded accordingly. Then if you've then delayed the pay slips getting to the employees, obviously they'll show in the employee self-service portal as and when you've stated for them to be there. Okay,
thank you. So another one for Vicky. So can you have more than one user for BrightPay for $199?
Yes, so the way our software works is that you get 5 activations, so in effect that can go on 5 PCs then, and then, more than 5 users, then you'll be looking at another license from us.
Okay. So just have one here for John. You might have already covered it, but there's no harm in recapping. So how is the money invested by Nest?
Yep, okay, so Nest has its own investment department sitting in our offices in London, and we use then the money that comes in to invest. At the moment, we use other investment companies to invest the money for us, so BlackRock, Legal & General and so forth. So we pick the funds that we think are suitable, that we need to invest in, and we use these other fund managers, London fund managers around the world, to invest the money for us. In the end, what the member sees though is if they're in the 2035 fund, they see that's all they see. It's a 2035 fund, and they see how their investments grow on their account. If they want to know, or the employer or you want to know the details of the 2035 fund, you can go onto the website, search investment bulletins, and every 3 months there are investment bulletins showing you the details of how each of the main funds are invested, the performance of the main funds, a little bit of commentary from the investment managers about what the outlook is and what's happened over the previous few months.
Okay, thanks, John. So Vicky, one for yourself. What is the price for BrightPay Cloud being added on to the existing BrightPay, and is this unlimited too? I think they might be referencing unlimited clients or unlimited employers.
Okay, and like one of you, Karen, you might have the biggest handed in your
I don't have I suppose, well, one BrightPay Cloud license is £49 plus VAT per tax year. And what we're also doing for Payroll Bureaus is we're offering substantial discounts depending on how many clients you want to set up on the cloud. So if you go to our website, brightpay.co.uk, there's a page there for all the different employer packs along with the discounted rate and the price. So you can have a look at it there. Okay, so the next one, now I think this might be for both of you. Does the contributions calculated in the payroll software override those in the pension environment? i.e., is that where the pension scheme gets the contributions from and not calculated amounts in the pension portal environment?
Yeah, so I think there's a sort of yes and no answer to this one, which is not very helpful, I know. So BrightPay calculates the pension contributions, and if you send the file, as Rachel showed you earlier, over to Nest, that will write up the contributions onto the Nest system. So it will take whatever comes out of payroll. You can actually go into Nest and ask it to calculate the contributions for you. But you only do that if you've got a payroll that can't do it, and BrightPay can do it. So why not just let BrightPay do it and send the file over to Nest, and it works fine. So just leave it as it is, and it sort of sorts itself out, really, I suppose, is the message.
Okay, brilliant. So maybe for Vicky, we have, does BrightPay set up all of the employees in Nest, or do you have to go into Nest Connect to do it first?
So with BrightPay, you'll be able to produce your enrolment submission, and basically when you submit that to Nest, that will then enroll the employees for you on Nest. Yeah.
Okay. Again, this might be for both of you, so we'll see who wants to take it. If someone has handed in their notice, are they exempt, or should they be postponed to after their leaving date?
Okay, so this is a change that the pension regulator made about a year or so ago. Originally, you had to put anybody in, even if they handed their notice in. Now they say it's actually not a requirement. If somebody's definitely handed their notice in, then you have to have evidence of that. Then you don't need to enrol them at all.
Okay. So another one for yourself, John. How can you check that an accountancy firm is set up as a Nest connector?
You can't if you're not that accountancy firm.
Yeah.
So if you're the accountancy firm, you can, but the only way you can really do it is contact the accountancy firm and ask them, because they will need to give you their unique number. So every Nest connector gets a number, is how we identify them, and a name, and it's those two things we need to connect you together, but we can't just hand those out. The accountancy firm will give you the information.
Okay. Absolutely. So again, maybe John, this one. I have a client due to stage. He has one employee who has indicated he wants to opt out. If I set the pension scheme up with Nest, do I still have to send monthly nil returns?
Okay, so there's a sort of hidden question, I think, in there.
Yeah.
You've got to enrol the worker. Just because somebody says they're going to opt out doesn't mean to say you don't enrol the worker. You've got to put them into the pension scheme. That's required by the regulations. Once they've opted out, then there is no need for a monthly submission because we will only expect contributions if there are active workers, people who are in the pension scheme. So if you've only got one worker and there are no active workers, it will just sit there as an empty shell until such time as you get a new worker and you enrol that worker.
Okay, perfect.
Can I just add, though, it's a common query that comes into our support help desk, actually, that, you know, where the employer has been approached by the employer saying, I'm opting out, but you do have to wait for that official notification from your pension provider.
Yeah. Really important.
Yeah.
Okay, another one for yourself, John. If all eligible job holders opt out, does the scheme just stay dormant and can it be used later?
Yes, so the employer account is just a very simple an account that sits there. If you've got no workers who are currently active, it will just sit there as a dormant. It's not really dormant, just sits there. And it's the action of enrolling a worker, so through BrightPay you send us the file to enrol the worker, that then kicks the thing into life, and it will then start expecting contributions from that worker until such time as they leave or they opt out, and then no more contributions will be expected from them.
Mm-hmm. And if somebody's set up a Nest account, John, and there's nobody, you know, they've got non-eligible, nobody goes into it, does anything happen with that account?
No, we won't write and tell you off or anything like that. It's absolutely fine. Okay. And again, there's no charge. So we're not going to say, you haven't used it for a year, here's a £100 charge or whatever. It's still, there's no charge at all on it. You can sit there for as long as you like.
Okay, perfect. So John, you're on again. So what happens if contributions are not paid to Nest by the employer?
Okay, so this is a difficult area and one that I think all those listening can add huge amounts of value here. In the end, if you don't pay contributions by the required date, and the date is shown on the system as agreed between us and the employer, or maybe you on the employer's behalf, we will end up reporting the employer to the pension regulator. Mm-hmm. And that could involve a fine from the pension regulator at the end of it. And if you look on the pension regulator's website, you will see just recently they published a report with an increasing number of small employers being fined for not doing the right things. So not doing the right things, including not registering with the pension regulator that you've got a pension scheme set up, not paying contributions on time, a whole range of things it can be. So really, really important that employers meet the duty dates that they've got and don't slip up.
Yes, also just I was reading the other day about reasonable excuses. I suppose that when we look at the small and micro employers, there's a lot of excuses that are coming through in terms of not complying with automatic enrolment. You know, they were sick, or there was annual leave, or they didn't know, they thought their payroll bureau was looking after it. And basically the pensions regulator is not accepting any of those excuses, so
absolutely.
there will
think
be
of it
fines.
as speed limits.
Yeah.
If you go over 30-mile-an-hour speed limit, you can come up with every excuse under the sun.
Exactly.
But you've broken the limit, and this is exactly the same, that there is no excuse that really is acceptable. This is a duty on the employer, and the pension regulators made it really clear that although they might get other people to do things for them, there is still a requirement on the employer to make sure it happens.
Yeah, absolutely. So next, will there be a recording from today's webinar? Yes, we're going to email everybody a recording after the webinar. So again, John, with regards to payment of contributions to Nest, will there be in future, instead of making contributions each payroll, the payment taken automatically by Nest by the date specified by the employer when setting up Nest?
Okay. And so basically, just to put some background on it, because obviously the person asking this question is using the Nest system and knows how it works. Each time you want to make a payment to Nest, you have to click the Make Payment button in the system. to tell us the money's coming over. So if you've got a monthly payroll, every month you've got to go in and click make payment. There is no system that enables us to collect the direct debit on a fixed day of the month, and we currently no plans to change that. Part of it's about thinking about some smaller employers and cash flows, that you can't just take a fixed amount out every month because the salaries of the person, people may change, but with smaller employers particularly, the monies may not be in the bank. And part of this, you can click the make payment. Hopefully it's only going to be clicked when there are funds to cover it in the bank.
Okay, perfect. So again, this might be one for both of you. If you have one employee who is under the threshold, do you have to set up a scheme or just be ready if they want to opt in?
Yeah, I suppose it's, there's no requirement to have a scheme in place. However, I suppose we would always recommend that you've done a little bit of research just in case, like as you say, the employee does decide to opt in, that you know that you have a scheme, you know, that you're thinking of going with.
Yeah, so you've got a time limit when you've got somebody opts in. You've got to deal with it, probably depending on the frequency of your payroll. It might be within a week or two for your weekly payroll. So you should at least know what you're going to do if you haven't set the scheme up. Yeah,
exactly. There's a question there, will we get a list of questions and answers? So today's webinar is being recorded, and the Q&A session is being recorded as well, so we'll send that on to everybody afterwards. Okay. Sorry, just give me a second. I'm just reading that down to the next one. So we have one for Vicky here. If we use the cloud, would we be able to use the license over different places, i.e. we have workers in different buildings who would have, sorry, scrolling down. It would have to be logged into our remote company at the moment. But if the data is all in your cloud, perhaps we could have the program on our computer individually and use it from there. Hope that makes sense. Yeah.
Okay, if I just interpret that correctly there, so I mean, I suppose the way the cloud was, I'm assuming we're talking about users here possibly, so yeah, I mean, you don't need to, it doesn't matter that you're in different locations as such. There'll be kind of a main administrator or a number of administrators who can then invite users, and that will give you access to kind of an employer as such, so you can have control who you give access to. I hope that answers that question.
Okay. So I have another one here in relation to the cloud. It's actually a good question. So if you have, say, 100 clients and you want, say, 25 of them to use the cloud, can you do that, or are you forced to pay for the 100 clients that I suppose you'd have set up on your desktop version of BrightPay?
No, if you only want 25, you can just purchase, I suppose we call them subscriptions, don't we? Really 25 subscriptions. Then if you need more, you can come back to us and purchase them as you need them as you go along.
Okay. So we have one here for John. If you went into Nest and asked it to calculate the contributions from there, would it override the contribution schedule sent down by BrightPay if one was sent down as well? Or would you have two schedules?
You certainly wouldn't have two schedules. So the way the Nest system works is that when you send us the contribution file, it updates data on the screen that you can see. And you can send as many contribution files as you like, and it will just keep overwriting what's there. And you could go in and you could manually change some things on the screen. And it's only when you're happy with what you see on the screen, you then click that make payment button, and that file goes off and gets the direct debit from the account. So the idea is, certainly with payrolls, our understanding is there's lots of last minute changes. So once you've got a file and you've got a last minute change, you've uploaded your file, sent your file via the web service. You want to make a last minute change, you can do that manually on the system. It will just change that one for you and leave everything else as it was. Or you can upload another file, or send us another file, and it will, the new file coming in will only overwrite the members on the new file. So if you've got 100 members and you send us a file with just 5 of them on, it will only change the 5, it will leave the 95 alone.
Okay, so it's quite flexible. So John, again, when does the welcome pack go out from Nest? Is it after the staging date?
Okay, so we send a welcome pack out the day after you tell us about the worker. So you enroll the worker from a file from BrightPay. So you get the web service file. So if we got the file today, which is a Wednesday, I think, from memory. Wednesday,
yes. All day.
I'm not very good at this. Wednesday, sometime tomorrow, second class post, the welcome booklet will be sent out to the worker. So yeah, we'll arrive probably Friday, Monday, something like that.
Yeah. Okay, maybe Vicky, you might want to take this one. So if all employees opt out, each month you still have to assess the workers if they want to opt in, and then you would set them up via BrightPay. Does that make sense? Sorry.
I think so, yeah. Yeah, I mean, what BrightPay will do is it does continuous monitoring for you. So, if there's somebody becomes at the relevant age, for them to qualify for auto enrolment, etc., they pass the earnings trigger. Yeah, I mean, if they opt out, then they won't be reassessed until
3 years.
Yeah, exactly. There's a while to wait, but yeah.
Okay. So, yeah, we had this question earlier on. Do you have to set up a scheme even if there are no eligible employees over the threshold? So, John, I think this one is for you. So, regarding the payments to the pension scheme, do you do it by direct debit?
Yes.
Yes.
So the system will lead you down that route as you set the scheme up. It will ask for direct debit details.
Okay, so another question kind of following on from that. Why does the direct debit have to be authorised every month? My client forgets to do it but is able to pay.
Yeah, it's the way the system's been built, and it's to do with what I described earlier on. It gives you some flexibility. You can change the contribution schedule as many times as you like before you make the payment, because the payments change every month, and therefore we want to make sure we're getting the right data. But yeah, I'm afraid you do need to go in every month and confirm payment.
Okay, so just the next question, maybe Vicky, you might want to take it. So if a company has 4 employees who have all opted out, do they need to be assessed every month?
No, not until re-enrolment.
Re-enrolment, yeah. Sorry, we did just cover that a few minutes ago. Okay, so for Vicky, does BrightPay automatically notify you of your duties at the end of the postponement period?
It does indeed, yes. So as soon as you reach, I suppose, the deferral date, so in that pay period in which the deferral date falls, you'll then get your alerts to tell you that you've got AE duties to perform.
Okay, and we just have one final question here. So if you did have any other questions, please type them in. So Vicky, does BrightPay automatically, I just did that one, sorry. Is the assessment done automatically within BrightPay for each pay period?
It is, yeah. So it's it's doing it in the background for you as such. So if it does detect that there's, an employee or employees for which you now have AE duties to deal with, then you'll get the yellow alerts and the flags appearing. If you don't see them, then obviously there's no AE duties in that particular pay period. Okay,
perfect. So that's the end of the questions. If you do think of any questions, or if you have any more questions, you can see that there's an email there, so sales@brightpay.co.uk, or this is our number for our support line, or there's a lot of information also on our website, on NES's website, and on the Pensions Regulator as well. So thanks very much for joining us today, and enjoy the rest of your week. Thanks, Vicky, and thank you so much, John.
Thank you.
Thank you.
And thanks, Rachel. Sorry. Sitting behind me there. Thank you. Bye.